big story breakdown. Ahead of the market open, U.S. stock futures are looking at a mixed open. The major equity averages tacking on gains after Tuesday's rally, but off this week's highs in Wednesday's trading session. Now, the Trump administration is considering cutting steep tariffs on Chinese imports potentially by more than half in an effort to ease tensions with Beijing. And China saying it's open to trade talks, but that it won't be forced into them. And Beijing also saying this morning no negotiations have been held and no deal has been reached. Now, investors remain nervous and uncertainty over trade talks, and President Trump's escalating criticism of Fed Chair Jay Powell does continue. The IMF now expects global growth to slow to 2.8% this year, down from 3.3% last year. And President Trump saying Tuesday that he has no intention of firing Fed Chair Jay Powell, a sharp reversal from the day before, and Trump has been pressuring Powell to cut interest rates, but the chair has said he won't rush that decision. Well, joining me to weigh in is Patrick Mueller, president of Bella Advisors. Good morning, Patrick. Thank you so much for joining me. Now, first and foremost, I want you to weigh in on what we're seeing across the markets. Now, market reaction to tariffs, there's been so much volatility across all asset classes. So why the whiplash?
It's more of the same, isn't it? Everything is so headline driven these days that the tariffs are on, the tariffs are off. You know, he said this, she said that. So it's just causing the markets don't really know what to do. They don't know really how to react to it because it's a different story every single day. And I think it's going to be a theme that we're going to see for the next year or so as all these new programs are rolling out, the tariffs, all these different changes that are happening. And so I think people just really need to get ready for it and know we're going to be in for some rough waters this year.
Yeah, absolutely, Patrick, because Q2, we've been seeing quite a roller coaster ride across all asset classes, but we're also starting to get some key economic data on the U.S. economy. For example, we saw durable goods orders spike, but of course, that is in anticipation of the tariffs. So what is your take on where we go from here at a time when Wall Street and Main Street are starting to see some signals, especially when it comes to earnings out from companies?
You know, earnings are going to be strong, I think, moving forward. And I think we just have to focus on the fundamentals and think of Warren Buffett. I mean, right now, Warren Buffett is sitting on over $300 billion in cash. And how often does this guy get it wrong? And so I think we should pay a lot of attention to that. And as we're going through these turbulent times, it's very important we can start picking up things that are on sale right now. There's companies that just get really unfairly beaten up right now, and I think it's a good time to be buying things at a discount as we see this happening throughout the course of the year. But at this point, unless you're retiring, be expecting these ups and downs. But I like big value companies, so think like Berkshire B shares because it's doing well this year and it's weathering the storm pretty nicely. And think of companies that you could fall asleep in 5 years from now. It's going to have done well during that period of time.
Well, as you mentioned, Warren Buffett's cash hoard, that is a considerable sum, and even a fraction of that, I'm sure many investors would like to have access to that. But you are a licensed investment advisor rep, and you have been helping people manage their retirement income for nearly 3 decades. So that means different administrations, different heads of the Federal Reserve. So what are you telling your clients about the current market volatility?
So important, and actually we're having a huge meeting this evening with a lot of our clients to go over this because it's so important, especially as people are retiring, that you don't want to have all your eggs in one basket. And what I mean by that is that we want to make sure that so much money is safe and protected from market losses completely. So take your age, and that's the percentage of your savings that should be in things that are safe and protected, because as you're retiring, you need this money to live off of, so we can't really afford to go through those ups and downs anymore. So it's more about protecting what you got, creating income, making sure you can maintain your lifestyle. So when things are set up properly, I kind of call it building your financial home. We got to have a solid foundation where we can't lose money, walls where we've got bonds and structured notes and income from that coming in. And then we've got our root money, which is kind of a lot of the stuff that we're talking about that's headline driven, all your stocks and mutual funds and ETFs. And as long as that's structured properly, we can have a financial storm come through and try to knock over your financial home. But as long as that's structured properly, you're always going to be okay. So it doesn't really matter who's in office or, the the uncertainty around the world when you have things set up right. So everybody should take a deep breath, and you know, you're going to be okay if you have that set up right.
Okay, Patrick, well, we will have to leave it there, but pleasure talking to you, and thank you so much for joining us this morning.
Thank you, Remy. Nice to be with you.